Hi guys, this is Sushmita, your very own crypto guide, and today I'll be talking about token and token supply. Tokens, generally speaking, are non-mineable digital units of value that exist as registry entries in blockchain. They are not directly a part of blockchain hashing values but are rather created and used with some value or identity attached on top of it of a blockchain. Strictly speaking, tokens are not cryptocurrencies like Bitcoin or Ether, but transferable units of value issued on the top of a blockchain. Tokens come in many different forms. They can be used as currencies for specific ecosystems or encode unique data. Tokens that reside on the blockchains include reward tokens, currency tokens, utility tokens, security tokens, and asset tokens. Additionally, some tokens might be redeemable for off-chain assets like gold, property, or stocks. Tokens are generally issued by companies using existing third-party blockchains such as Ethereum blockchain, as exemplified by many ERC20 tokens that were issued and sold through ICOs in 2017. Matic is one such ERC20 token built on the Ethereum blockchain, and it powers the Polygon network. Token supply simply refers to a given number of tokens. There are different numbers of token supplies like initial token supply, current token supply, total token supply, maximum token supply, unlimited supply, minted tokens, etc. These terms form the foundation of token economy. So this was about token and token supply. To know more about such technical terms, do write in our comment section below and do not forget to subscribe to our channel.